Tariffs and trade wars were sold on the idea of bringing manufacturing and jobs back to the United States from China, who stole them from us. But it seems that neither China nor the US are turning out to be winners in this war. Instead, it seems India is quietly rising as the victor. Manufacturing and jobs are moving from China to India at a faster pace than most people would have expected possible, and it's not just from the large corporations, it's from small businesses as well. But beyond the trade war, there is an even bigger reason at play behind this global wealth transfer, and it's something you can get in on as well. My name is Joe Brown. I'm a former stockbroker. Now I run Heresy Financial, where I help active investors decrease portfolio risk and increase their long-term returns. Recently, Apple shocked markets by announcing that they were going to be moving iPhone assembly from China to India because of the tariff turmoil. And the part that really shocked investors was that Tim Cook said for the June quarter, they expect the majority of iPhones sold in the US will have India as their country of origin. This isn't something they're planning on taking 10 years or longer to implement. This is happening this year, next quarter. Insanely fast. But again, like I said, it's not just the big giants. We are seeing the same behavior out of small businesses, direct to consumer brands, e-commerce companies that sell on places like Amazon, all scrambling to make moves out of China and finding India as the place that surprisingly is welcoming them with open arms, better prices, and sufficient quality. So why is this happening right now? Well, number one, China is no longer a cheap place to manufacture things. That is something that was true decades ago. It is no longer true today. In fact, Tim Cook mentioned this years ago when talking about why they manufacture in China.
There's a confusion about China, and let me at least give you my opinion. The popular conception is that companies come to China because of low labor costs. I'm not sure what part of China they go to, but the truth is China stopped being the low labor cost country many years ago, and that is not the reason to come to China from a supply point of view. The reason is because of the skill and the quantity of skill in one location and the type of skill it is. Like the products we do require really advanced tooling, and the precision that you have to have in tooling and working with the materials that we do are state of the art. And the tooling skill is very deep here. You know, in the US, you could have a meeting of tooling engineers and I'm not sure we could fill the room. In China, you could fill multiple football fields. It's that vocational expertise is very deep, very, very deep here. And I give the education system a lot of credit for continuing to push on that, even when others were de-emphasizing vocational. Now I think many countries in the world have woke up and said, you know, this is a key thing, and we've got to correct that. But China called that right from the beginning.
In other words, the reason why so much manufacturing has so far been done in China is because they have so many people that if you need a certain amount of people to do the type of manufacturing that you need, you are very likely to find them in China. Now, arguably, they are better on a per capita basis than many other countries, but you don't even need that to be true. All you need is a sufficient number of people total, and if you have a certain percent that have skill in the area that you need, you are more likely to find the total number of people you need in a place with a lot of people. But the rising costs that have slowly creeped in on manufacturers from China is something that everybody is now painfully aware of. On top of that, also, we have to acknowledge the fact that the tariffs and the trade war have started to have a big impact here. Very few companies would be scrambling for the exits right now if it weren't for this big policy push. But this is something that was destined to happen at some point anyway, even without a trade war, simply because of China's collapsing population. The median age in China is now 39, and China has more old people that need to be supported than it has young people to support. support them. The birth rate in China is abysmal, and now the Chinese population is shrinking for the first time since Mao killed a bunch of people under communism. And as a result of this demographics implosion, they have employed a top-down command and control over their economy, trying to stimulate their economy through quantitative easing, money printing, and cutting interest rates. But if it's not already apparent to them, at some point it will be. You cannot print your way out of a demographics implosion. Enter India. In 2023, India finally passed China up to be the country with the highest population in the world. Now they sit at 1.45 billion people. Not only that, but they still have a growing population. And while their growth rate has tapered off in recent years, it is nowhere near getting to the point of having a shrinking population like China. On top of that, the median age in India is only 28, which means by and large, they have a very young population. In other words, they don't have an inverted demographics problem like China. They have a young growing population. Now, earlier I showed you why Tim Cook said they chose China, and it's because of the sheer numbers of people that can do the work that they need. This is also true in India, hence their ability to shift all US iPhone manufacturing to India this year. They have pro-manufacturing government initiatives, tax breaks, a largely English-speaking population, even if you don't like it when your customer service centers are located there. And most importantly, they are hungry for growth. This is something that many people have been shocked by, all the way from small businesses to large ones. But right now, the negotiations that India is engaging with to get business are very aggressive. Price cuts, incentives, and so far, what many businesses are finding is that they are getting better pricing and the same or better quality of production out of India that they were getting out of China. So who is going to be the beneficiary of this massive transition from China to India, with India becoming the factory of the world? Well, the main winner here is obviously India, who's getting all this business that they desperately want. In the short term, this will mean that consumers lose. Transitioning like this is very costly, even if you are going to somewhere that is going to be cheaper over the long run. The transition has a cost. It also might come at a cost of lower quality, at least at first, which means that the consumer, largely American consumers, are going to be taking the hit up front. But over the medium to long term, it is very possible that this is a more beneficial move for consumers, because judging by the direction that things are moving right now and the speed at which we are headed there means that US consumers could very likely be getting cheaper products that are higher quality. And because the definition of wealth is the stuff that you have access to, it's your quality of life, it's what it costs you to get what you want, then over the medium to long term, this could mean a wealthier consumer. Now, the economic implications of this are something that I think most people are intuitively aware of, but maybe when they watch the news, they just don't think about it. Manufacturing is not coming back to the United States. US citizens do not want to work in factories. Right now, we have more job openings than we can fill in US factories. Now, part of that is because the cost of labor in the United States. Most US workers want to get paid more than they could working in a factory. And if they are okay working for those wages, many times they don't have the skills to do so. This means that it doesn't matter how many jobs you try and create in manufacturing in factories in the United States, we don't have the people to do it. So instead of shifting these jobs and this manufacturing to the United States, this is simply going to other countries, largely India, other countries in Asia as well, like Vietnam and Indonesia. This does mean economically that India's GDP will probably benefit massively from this shift. So as an investor, one thing to consider is investing in India, which is very easy nowadays. There's an ETF for everything. One example is symbol INDA. This is the iShares MSCI India ETF. If you wanted to get really fancy, you could short China as well. I don't recommend naked shorting. You could do so through buying puts with ETFs like MCHI, the iShares MCSI China ETF. But at the end of the day, whether this shift does indeed continue to happen as quickly as it's happening right now, or it takes a little bit longer, it does seem like this shift is inevitable. India is where China was about 30 years ago. The cost and quality of manufacturing seems to be shifting at a rapid pace to India, and the communist policies out of China are doing nothing to be able to slow that down. And if you'd like more direct help from me applying ideas like this to your portfolio, go ahead and click on the link in the description below. As always, thank you so much for watching. Have a great day.